Q1 was a very solid quarter, but that's because most of those deals had begun before anybody had even heard the term coronavirus. Q2, of course, was pretty much an epic disaster for the M&A industry. Very little got done there, and then we've seen a huge recovery in Q3. Q3 measured by deal value was actually bigger than Q3 in 2019. In the US, that deal value was a staggering 425% ahead of Q2. And in EMEA, which is having a difficult time anyway, it was up only 55%. So you could say the markets are back open again, but these headline figures really disguise what's going on beneath the surface, because what we're seeing is a return of the mega deal, which is really skewing the numbers. If you look below that at sort of mid-market deals, actually globally, we've had the worst year for deal volume since 2009. And even taking into account the mega deals, Europe had its worst year for deals since 2010. And within Europe, if you then layer it a little bit further, the UK actually accounted for 60% of European deals.
Karri, let's just peel away from the headlines and just move into that mega deal story a little bit more, because it does feel as though there have been a ton of different transactions that have been revealed to the market in recent weeks and months. Some of them companies that may have been mooted as potential takeover targets or rivals that might be consolidating. Whatever it seems to be that might have been standing in the way before, certain barriers, particularly in banks, seem to be removed right now. Is this just purely about staying alive and surviving this crisis? Is that the motivation for this consolidation?
It depends very much on the industries. What we're seeing most of is large tech deals. These are extremely well-capitalized companies that are making record profits. It's replicating the same theme that we've seen in the stock markets, with tech really leading the way. Almost a quarter of deals in the US are tech deals at the moment, whereas in other industries, you're seeing to a degree a forced consolidation because companies are really struggling. And then further down the spectrum, you're seeing a hell of a lot of distressed M&A, particularly within the consumer sector.
Karri, tell us a little bit about valuations at the moment. It seems that it's very sector related right now. We were talking earlier this week with the head of Vuori Group, who are just shedding their oil and gas assets. But what are you seeing in terms of overall valuations and pricing around these deals?
Well, if there's a silver lining to the drop in deal volumes, it is that there's a scarcity of high quality deals, which is actually pushing deal values up. So in tech, which of course is the most active sector, we're seeing the valuations creeping up, much like we are on the stock market. But the sector where you're really seeing the difference is consumer, where we've seen almost 6x added to the average multiples, going from sort of 9.5 to almost 15 times at the moment.